Imagine driving a car at 100 miles per hour in thick fog. You take your foot off the gas, you coast, but you have absolutely no idea if the road ahead is a cliff or a highway. That is exactly what is happening in Europe right now. While you were watching the Fed, the European Central Bank just pulled a move that should send a shiver down the spine of every investor in New York, London, and Toronto. For the fourth meeting in a row, they've frozen. They're doing nothing. But that's not the scary part. The scary part is why. Today, ECB Governing Council member Madis Muller basically admitted that the central bank of the second largest economy in the world is flying blind. They don't know if they're going to pivot, and they don't know if they're going to hike. If you hold US tech stocks, if you're betting on the dollar, or if you're looking at real estate rates in 2026, you need to understand why Europe's paralysis is about to become your problem. Wall Street hates bad news, but there is one thing it hates even more: uncertainty. And right now, the European Central Bank is serving up a buffet of it. Let's peel back the layers on this. Here's the data. It's December 20th, 2025. The ECB has kept the deposit rate locked at 2% for 4 straight meetings. They're sitting on their hands. Now, usually, when a central bank pauses, they give the market a wink and a nod. They say, hey, we're pausing now to cut later, or we're pausing to let inflation cool before we tighten the screws. Not this time. Madis Muller, the Estonian official on the council, just went on record saying it is honestly too early to speculate what happens in 6 months. Did you catch that? He says he can imagine scenarios in both directions. Translated from central bank speak to plain English, that means, we have no clue what we're doing next. He says there are no grounds to hastily change interest rates. They want to wait and see. But here's the issue: while they are waiting and seeing, the global economy is shifting gears. Why is Muller so hesitant? Because Europe is in a trap. If the euro area economy tanks, which, let's be honest, is a real possibility given the energy drag and manufacturing slowdown, they have to cut rates below 2% to stop a total collapse. But, if they cut too early and inflation flickers back up, they destroy the purchasing power of the euro. Muller is saying, if the economy doesn't do well, maybe there's reason to reduce rates. That's a massive maybe. This indecision is dangerous. It creates a policy vacuum. And you know who fills a vacuum? Volatility. Okay, so why should a guy in Chicago or a trader in London care what Madis Muller says on Estonian radio? Because of the euro to US dollar pair. If the ECB is paralyzed at 2%, but the Federal Reserve continues its trajectory, whatever that may be in late 2025, we are going to see massive swings in the value of the dollar. Think about your portfolio. Apple. Tesla. Coca-Cola. A huge chunk of the S&P 500's earnings come from Europe. Scenario A, the ECB realizes the economy is dying and they panic cut rates. The euro crashes. The US dollar spikes in value, DXY goes up. Result, US multinationals get crushed on earnings because their European sales are worth less. Your stock portfolio takes a hit. Scenario B, inflation sticks, and they are forced to hike or hold longer than the US. The euro strengthens. Result, this puts pressure on US exports and messes with global bond yields. When the ECB admits they don't know the future, it means the risk premium on everything goes up. They aren't providing guidance, they are providing confusion. And in a market that is already jittery about 2026, confusion is the match that lights the fuse. The ECB is playing a waiting game, hoping the data will make the decision for them. But in this economy, he who hesitates gets run over. Keep your eye on the dollar index this week. If the market smells fear coming from Europe, capital is going to flood into the US, and that is going to shake up everything from gold to tech stocks. I'll be watching the charts so you don't have to. If you want to survive the volatility of 2026, smash that like button and subscribe. I'll see you in the next one.